Hello friends, welcome back to my channel. This is week 8, 2023, and today we'll be discussing some of the key events that happened last week, and also we will try to give a market outlook for next week. So let's get started. So last week it was full of data from US and India. There was US inflation data which came around 6.4%, and it's a sign of relief because the forecast was 6.5%. So inflation is coming down in US, which is a very good sign. But on the other hand, there was US jobs data, which came around 3.4%, and the forecast was 3.6%. So if US jobs data is higher, then it's better because more unemployment will help in fighting for the inflation. So that is not a good sign, and US Fed will look into that. And coming back to our Indian markets, our India CPI data came around 6.52%, which was much higher than the last month's inflation data, which was 5.72%. So definitely that's a big concern, and RBI will address this in next monetary policy. Maybe one or two more interest hikes is expected in next monetary policy. So coming back to our markets, so US market was totally flat, and same is about the Indian market. Both was not reacting to all these news. Of course, there was intraday volatility and all those things, but on week to week close basis, our Nifty is up by 100 points, and BankNifty is down by 400 points. And BankNifty fall came mainly because of the Adani issue. So every day there will be some news on Adani, and since they have a great exposure, since the banks have a great exposure on Adani, so Bank Nifty will be volatile. That is the expectation. And apart from that, there was not much volatility. Nifty was up by 100%. That is supported by IT stocks and Reliance after a long time. So IT is performing well. And coming back to next week's outlook, so market is still on that very narrow range. We can say it's between 17,800 on the downside and 18,000 or 18,100 on the upside. Of course, on Thursday we opened a gap up around 18,130 levels, but we have seen a sharp selling from that point, and the market came all the way down towards 17,900. So definitely this is a range bound market for 2 weeks continuously, and we should be very cautious as a trader because the VIX is ultra low. It is trading around 13, and once the volatility comes, and if market tries to shoot up or come down, VIX will be shooting up from 13 to maybe 15, and then 17, 18, and that will be a very hectic scenario for all the traders. So this is the time to be very cautious. And personally, I am trading on almost half of my usual quantity, and definitely I will be playing with very strict stop loss once the market starts moving violently, and once it gives a clear cut direction on the either on the upside or downside, we will be taking position according to that. So for next week's, again it can be a range bound market, and on the later half, as we were approaching the monthly expiry, there can be a little bit volatility. So I will be watching for 17,800 on the downside and 18,150 on the upside. Once we break any of these two levels, we will start playing directional. Otherwise, it should be a very cautious move. It's a range bound market, and we will be playing with only half of the usual quantity we play. So that's it for this week. Let's meet on next week. Thank you. Bye bye.